got interested in it? Does it look just like the insides of a computer?
That's interesting. Because I've always hated software electronics because always stopping me at speed.
So, just to get an idea of the audience, first of all, hands up who's heard of Bitcoin? Okay, hands up who knows what I'm about to say before I've said it, or some of it. Excellent.
Is this question where hands up if you know what I'm going to say before I've said it, and then if we all put our hands up, you'll say, well, I don't need to speak then?
No, nothing like that.
If you don't put our hands up, you say, well, I'm not going to talk to people who don't know what I'm talking about.
Hands up, anybody knows the gist of public key encryption? Okay, that's good. So, you already know the building blocks, which will mean we can go to the pub even that bit earlier. So, I first heard about Bitcoin in passing sometime in 2010, then heard about it again earlier this year, and the second time it stuck. So I actually read up on it a bit. It's been hitting more mainstream in recent months and weeks and generating headlines. So we're starting to get US senators asking questions about it. We're starting to get the likes of the Daily Mail mentioning it. It's just at the threshold of entering mainstream consciousness. Probably. Assuming it doesn't crash and burn.
It's a bit like the Linux desktop. It's almost there to...
A bit like what, sorry?
The Linux desktop is almost there to
well,
world domination.
Hopefully it won't be at the threshold for as long as the Linux desktop has been.
1999 was the year of the Linux desktop.
Yes, yeah. It was a great year, and so was every year of the desktop since then.
Yes.
And Fusion, only another 30 years. That's
Oh, yes.
Acid nuclear.
Yes. So, yeah, that's the background that I will be giving this talk.
from Google.
That didn't work. No, that didn't work either. It's alright. Trying to be clever. So anyway. So, hi, I'm Alex, and this will be Shaving a Haircut to BTC. BTC being the three-letter symbol for Bitcoin, like USD or GBP. First question, very basics of what is Bitcoin? It is cash over the internet. Now, this has been tried a few times before. You may have heard of e-gold or a few other things with gold in the name. And they were all shut down, mostly by the US government, because they don't like you not using dollars. They can't collect taxes easily, and it makes them very nervous. And they say things like terrorism and other things to make you go away. Critical difference with Bitcoin is there is no central server. There is no company called Bitcoin. There is no single person that holds the database of Bitcoins. There is no bank of Bitcoin. It is like BitTorrent, entirely distributed. No single server, no single point of failure. The whole thing runs in a peer-to-peer manner. And that is its strength and its weakness in many ways. So, critical thing to remember is that it is distributed and that it is cash. You don't have a Bitcoin account, or rather you don't have to. You run the Bitcoin client software, and your coins are on your laptop. Lose your laptop, you lose your Bitcoins, and you cannot get them back. If you back up, if someone gets on your laptop and copies your wallet, which is what holds your Bitcoins, they can now spend all your Bitcoins, and there is no recourse. And that is what happened to this unfortunate gentleman that we saw earlier, who lost about 25,000 Bitcoins, which is roughly valued at maybe $500,000. Assuming a whole load of things. It could just be a lot less because of markets. What you're looking at there is a screenshot of the Bitcoin client. Runs Mac, Windows, Linux. It's open source. Some of the more eagle-eyed amongst you might recognise WX widgets there. And you're seeing basically my wallet. I've blanked out a couple of bits because
This is getting streamed on the internet and people can go and...
Precisely, yes. The only things I've blanked out there are the Bitcoin addresses of 2 people I've had dealings with.
Mm-hmm.
One who paid me 2.5 Bitcoins for some silly SQL I did for them, and another who I paid 5 bit cents just because I was feeling generous that evening. The part you're seeing here is the first ever Bitcoin address that I generated and received Bitcoins on. And I'll come to that a bit later in more detail. Critical things: there's no PayPal of Bitcoins, so if I want to send some money to John and he's running the Bitcoin client, I just send it directly to him. There's no accounts, there's no banks, there's no middlemen, basically. So, implications of that: 1, once I've sent in the money, that's it. I can't get it back if he doesn't send me the goods, or I can't have it blocked because he is being deemed to have his account can't be frozen, basically.
Right. It's cash.
It's cash in every way, except over the internet. So you can send it to anyone in the world, or receive it from anyone in the world.
So you're saying that if that person who copied your Bitcoin wallet and started spending, the contents of your wallet would be reduced as well?
Yes. Effectively, if they copied my wallet and spent everything in it before I could, my wallet would be useless. Might as well delete it.
Okay.
But I presume you could set up another wallet to transfer things quickly.
Yes, if I realised my wallet had been copied, I could set up a second wallet on the same machine or on a second machine and pay myself all the Bitcoins before the thief got in, hopefully. But I'd have to realise it. The same question. Okay.
Does that mean there's a public key for each? I'm just trying to figure out how it works.
Don't worry, I'm going to go into the gory details in a second. So, that's the state of things. A little history now. And I was hoping to have my notes at this point, so I might get his surname wrong. But the whole Bitcoin project was started by a person of the name Satoshi Nakamura. Now, we don't know if Satoshi is his real name. We don't even know if he is a he. It's probably a pseudonym. He may or may not be Japanese. He might even be British, based on some speculation. basically, he seems to be someone who's very strong on cryptography. You know, the type of person that when the US government was declaring strong encryption to be a munition, he would have probably been the type that was campaigning against that. And Bitcoin relies heavily on cryptography, public key encryption being one of them. Wrote a paper on it and published it in 2008, released the first version of Bitcoin in early 2009, and started the Bitcoin network around the same time. But nobody knows who he is, or who she is. For all we know, it could actually be a big
Corporate entity.
Yeah.
well, yeah, it could be
Yes.
unlikely but possible. Could be the US government, could be the NSA. Highly unlikely, probably more likely some disgruntled programmer somewhere. But who knows? So, how does it all work? It's all based around public and private keys. There isn't... If you wanted to see a Bitcoin, you wouldn't be able to. It's one of these things where it's everything around it defines it. It's not actually existing. A Bitcoin is the history of all transactions of that coin, or involving that coin, effectively, going back to when it was first generated, and I will get onto that in a second. So, if I, Alice, didn't really think of that, did I, wanted to send you 5 Bitcoins, the way it would, or rather, if you wanted to send me 5 Bitcoins, the way it would work is that I would tell you my public key, which is the same as my address. The address is the public key is the address, they are the same thing. And it's that long string of digits there. It's based on an elliptic curve public key cryptography, if that means anything. I only know the name. Once Alice has sent Bob the public key, Bob then makes a transaction, which is just a string of bits that says, I, Bob, pay 5 Bitcoin to this address, and I sign it with my private key. So I'm the only one that can do this, because I'm the only one that has the private key, same as GPG. The only one that can sign an email is the holder of the private key. And then once I've signed that transaction to that address, I send it to the Bitcoin network. I don't encrypt it, I just sign it. And once it's on the network, it gets distributed to all nodes. The thing that records the transaction is not Bob or Alice, it's a third party called a miner, as in coal, not as in young person.
Or bird.
Or that. What miners are doing is the job of keeping the ledger, keeping the transaction log. They are beavering away, collecting transactions and putting them in blocks. And I'll come on to that in a second. Basically, the chain of blocks that makes up Bitcoin is just a long list of transactions going back to the beginning of time. Or rather, the first ever block, the Genesis block. To be considered a valid transaction, it has to be signed, has to check out against all the rules. You know, haven't tried to spend money you don't have, haven't tried to send it to an address that doesn't match the checksum. It goes in the block, and the block goes on the end of the blockchain. in theory, that block could get lost in all the noise of the network. So consider a transaction valid, we wait for 5 more blocks to be added on the end.
And there's
that-
only one transaction per block, is that right?
No, many, many transactions per block.
Okay.
I'll come on to that in more. Basically, the point is that we have a recorded transaction and everybody knows about it. The transaction is public knowledge. Everybody in the world knows that Bob has paid Alice. Sorry, everybody in the world knows that this public key has been paid 5 bitcoins by this other public key. If you've done it right and you want to remain anonymous, nobody knows who those public keys belong to. But I'll go into more depth in that in a second.
Mm-hmm.
Am I going too fast, too slow?
Just right.
Just right? Fantastic. So, that's one transaction.
Yep.
And obviously there are thousands of people worldwide doing these. All their transactions are going in blocks, and the blocks are building up into a long chain. Why do the miners do all this for us? What's in it for them? Well, the reward miners get for recording all our transactions for them is bitcoins. The reason it's called mining is that every time you or I as a miner complete a block, we get to put in the first slot, the first transaction, pay so and so 50 bitcoins. And given that reward, it is more profitable to verify transactions and complete blocks and keep the network going than it is to try and defraud the network. So the incentive is there for everybody to be honest. That's the theory, and seems to be working in practice. The question is, what is to prevent me as a malicious miner, a malicious person, flooding the network with thousands and thousands of blocks with transactions that I've put in there to my advantage that pay me all the bitcoins? Well, one, I couldn't sign those transactions, but two, even if I could, there is a throttle on blocks. The throttle is that to complete a block, you have to prove that you've done work on it. You have to. It's called a proof of work, and it's a cryptographic building block. The proof of work in Bitcoin is that you have to hash the header of the block that you're trying to complete, and your hash has to have a run of zeros in it. Now, hashes, like when you hash a file, SHA-1, SHA, MD5, bear no relation to the original file. You can't predict what the hash is without actually doing the hash. So the only way to prove that you've done the work, to complete the hash that has enough zeros in it, is to brute force it. And by finding a hash, that proves that on average you've tried so many million hashes. And obviously other miners on the network will only accept your hash if when they run the hash themselves, it matches. So the proof of work is something that's very hard to find a value that satisfies it and that produces a valid block. It's very easy to check. Because to find a valid block, you have to do so many million hashes. To verify a block, you only have to do one hash, and that's microseconds. Now, all of this works as long as honest miners control the majority of the network. If you are China or the USA or Google, and you have a few billion pounds to throw at it, you could create enough computing power to rival the whole Bitcoin network. But if you're spending that sort of money, you probably find it more profitable to be honest. That's the plan. The incentive is there to be honest as opposed to try and fight the system. And in the white paper that preceded all this, there is maths that shows if you control so much of the network, you have to be this lucky to complete a block before the network does. Now, mining in the very early days of Bitcoin was really easy because the whole Bitcoin network was like 5 computers, 5 guys in their bedrooms, or various random people on the internet. So solving blocks was very easy. But, of course, computers get faster. They double every 18 months on average. So, how do you stop increases in computing power making all this proof of work nonsense, useless? Well, the network actually measures how fast blocks are being generated. And every 2 weeks or so, there's an algorithm for this, it adjusts the difficulty of the proof of work so that on average it tries to get 1 block every 10 minutes, no matter how much processing power, how much silicon you throw at it. At the moment, the total processing power of the Bitcoin network is about 9 terahashes a second across all machines. That is a lot. That's, more computing power than a Google data center, because hashing on a CPU takes a few hundred instructions. But I'll come on to this. Unfortunately for us, the days of, free bitcoins, we can mine this, we can run this software on our machine and we'll get blocks and we'll get bitcoins. You're not going to do it on a CPU because it's popular now. There's lots and lots of people doing it. I'll go into the maths a bit later. Okay, not too many glassy eyes. What does a block look like? Real simple. You've got a 4-byte version, a 32-byte hash of the previous block, 256 bits because the hashing algorithm is SHA-256, a hash of all the transactions in this block, and there could be 1, there could be 1,000. In the future there could be tens or hundreds of thousands of hashes in a block. Then you've got a timestamp, obvious. The target, this is the thing that's determining whether it takes us 10 tries to complete the block or it takes us 10 million. This is the one that's adjusted every 2 weeks, is the target. And finally we have a nonce. The nonce is just, we choose the value of the nonce and hash the block header. If it comes in under the target, we've got, that was the nonce we wanted. If not, we try another one.
Excuse me, you said the specification are changing, something like that. You said you're changing the future. Or
yes.
So is it like Internet Protocol version 1, 2, 3, and 4, something like that?
Yes, I don't know the current value of version, but basically if the format of the blocks was to change, that version would be incremented by 1.
So a block is like the equivalent of a packet, more or less, in
Yes, but
Bitcoin.
a block is hundreds of kilobytes or a megabyte, as opposed to a packet. Certainly I modelled this diagram after the diagrams you get of IP packets. Basically, you've got there 4 rows of 16 bytes. So the total size of the block header is 64 bytes, if I've got that right. The transactions, the body, can be anything from a couple of hundred bytes to a megabyte at the moment. And what I was talking about earlier about it changing in the future, currently the Bitcoin software enforces a maximum size on a block of a megabyte. This was done in the early days basically to keep things simple in the early days. Make it a tiny bit harder to spam it, in case there was something somebody hadn't thought of. As far as I can tell, in the protocol, there is no limit on the size of a block. Certainly it could be a gigabyte, possibly it could be a terabyte, but you're talking far in the future when computing power is a couple of 1,000 times faster again than it is now. And the whole point of the block is you've got the hash of the previous block, which ties it into the chain. You've got the hash of all the transactions in this block, which means you can't change any of the transactions without recalculating the whole block and doing the proof of work again. And you've got the timestamp, which proves when that block was generated to within a few seconds. And you've got the target and the nonce, which is your actual proof of work. And when Alice and Bob publish their transaction, it goes into one of these blocks. Once the proof of work is completed, that transaction gets in the blockchain as that in part of that block. That happens 5 more times and you've got a definite transaction. No one can... It is highly unlikely that somebody could reverse that transaction by going back 5 blocks and recalculating the blockchain. So there's the blockchain. Have to reiterate again, the blockchain is public. Everybody that's running the Bitcoin software has a copy of the blockchain at the moment. So every transaction is public. In theory, it's anonymized by the use of public keys as opposed to real-world identities.
So when you say that if they have a copy, do you mean that it's like copied, cached somewhere or not?
I mean, on my laptop,
Yeah.
I'm running Bitcoin.
Yeah.
I've got every Bitcoin transaction on my laptop since the Genesis block, the very first block.
It's going to expand indefinitely.
I'm trying to remember the size of it. I think at the moment the entire blockchain history is a few hundred meg. And a new block is every 10 minutes on average. And a block is about a meg.
This is the edit going to be stored on a server.
Okay. If I could hold on to that question for a couple of slides, I'm going to go on to the future of Bitcoin toward the end. Now, because this is all distributed, we don't have a single server that's locking things and doing our ACID for us. There is the possibility that the blockchain could divide, either by somebody being malicious or just the coincidence of two honest miners solving a block at the same time. The way that is resolved is all the other miners choose one of them and try and generate the next block. And if this branch generates a block first, this becomes the blockchain. Because Bitcoin always considers the longest chain to be the one true chain. But it's not measured by number of blocks, it's measured by block total difficulty. This is a bit of a weird one. Basically, if I am a malicious person trying to generate a long chain of blocks that work to my advantage, I'm going to pretend that the difficulty dropped in my blocks, because that makes my proof of work easier and I can start adding lots of blocks to my branch faster than the honest people can. But by the time the second block is generated in the true branch at full difficulty, it will be considered the true block, because even though there's only 2 blocks more since the branch, and there's tens, hundreds in this, the total difficulty for the honest one is higher. Does that make sense?
How is that known? How does everyone... Because you've got 2 people here who are ahead, presumably, of the other miners. How do the other miners judge
The difficulty.
the difficulty that they've been through?
They judge it by the value of the target.
Right.
Basically, the difficulty is you're trying to create a hash of the header that has a long string of zeros in it. If I am generating this one and I set the target easy in my fraudulent blockchain, all the other nodes will see that in the blocks that I publish, and they will realise it's low difficulty and discard it once this generates one at the original difficulty.
Wouldn't that mean that you could, again, if you had tremendous computing power, you could go the other way? You could effectively create blocks in advance. You would need tremendous computing power, but you could up the difficulty and be taken as the...
You can't do any pre-calculation because the hash of the block header depends on the hash of the transactions.
Yeah. Well, no, if your transactions were fraudulent, you could, because you could create transactions you wanted and hash those, but yeah, and you have to hash the previous block as well.
What I missed out, because I'm not looking at my notes at the start of this talk, was my disclaimer. I'm a Python programmer and a, ooh, shiny things, that looks nice geek. I'm not a cryptographer, I'm not an economist, I'm not a financial advisor, and I'm not an accountant.
Or a lawyer.
Yes.
To answer your question, if you branched and one branch bumped the difficulty,
yeah,
they wouldn't be able to, on their own, without a massive investment.
That's not. I'm speculating that someone has a secret super mega computer.
But then it rolls back to the point of, well, it's actually more beneficial for them to actually be honest.
Unless they want to discredit the system. Depends what their motivation is. If they're seeking to discredit the system, and you know who this would be, that's a good way of doing it.
Probably there is not the answer, but somebody has attempted to answer that question on the Bitcoin wiki. We'll have a look afterward. And just to so the point of the blockchain is basically to prevent you spending the same money twice. Because these are bits are copyable, we want to prevent double spending, effectively. So, some numbers. It's been running since 2009. So far, 6.5 million bitcoins have been generated by mining. And that's from blocks being rewarded 50 BTC each. In total, there will never be any more than 21 million bitcoins. Because the reward for mining halves about every 4 years. So at the moment the reward is 50 per block. In 2013 sometime the reward will become 25, 4 years after that, 12.5, and so on and so forth, it will asymptotically approach 21 million, probably without reaching it once the halving runs up against the bit resolution of the bit resolution of how finally you can divide a Bitcoin. So far we've generated 130,000 Bitcoins. So we're just under 2 years.
Bitcoins or blocks? Because
What did I just say?
Bitcoins.
Sorry, I meant blocks. 130,000 blocks in the blockchain so far. 6.5 million Bitcoins.
So
Which,
this seems to restrict the number of people that can have bitcoins.
well,
Only a third of people in Britain may have a bitcoin.
well, first of all, the fact that there will only be ever 21 million is by design. Partly Bitcoin has been a reaction to, I've got to get the name right here. Damn it, I've forgotten the name. Basically, the recent financial troubles, one of the levers that was pulled to address it was quantitative easing. The database equivalent of printing money. And I am not an economist, I have horribly done that explanation. But whoever designed Bitcoin did not agree that this is a good thing. So they have designed Bitcoin such that you'll never be able to print money faster than that graph. You can't do quantitative easing. So in fact, Bitcoin, it is said, will become a depreciative currency. I.e., if you have 10 Bitcoins today, and that can buy you 10 loaves of bread, a year from now, the same 10 BTC could buy you 11 loaves of bread. Because the total supply has remained fixed, or in fact because of attrition, people dropping their hard drives without backups, losing their wallets, forgetting they had a wallet, Bitcoins will disappear from the system.
Yep.
And once a wallet has been deleted or destroyed or lost, you can never gain those Bitcoins that were in that wallet. Now, there's only 21 million of them, and at last count, there's about 4.5 billion people on the planet. That doesn't seem to be enough to go around. Bitcoins are divisible to 10 decimal places. So, in theory, you could send a transaction for 1 times 10 to the minus 9 Bitcoins. So the argument goes, we haven't got enough Bitcoins, right, we move the decimal place to the right. We call it something else, and we now have 210 million of them, or 21 billion of them. Again, I'm not an economist. There are people that argue that a depreciative currency, or one that you cannot do quantitative easing, is a really, really bad idea. And I've included a link at the end for if you want to follow that up. Did that make sense?
Yes.
Almost.
The other thing to
In as much
iterate...
sense as money makes.
Sorry?
In as much sense as money makes.
Indeed. So the last few Bitcoins will be generated around the 2033 time. And by that time, each block mined will be awarded about half a Bitcoin.
Or if we slid the decimal point across, that's irrelevant.
Yes. It all depends whether Bitcoin becomes popular or it crashes and burns. Even when mining a block becomes very little award, it'll still be worth mining blocks because it is hoped or expected by that time that Visa or whoever replaces them will have taken over mining. They will be doing it because they make money selling credit cards. They will also make Bitcoin, though, from transaction fees. Now, I said at the beginning it's free to send money, it's free to receive money. That is true. You can send and receive it effectively for the cost of running your laptop and your broadband, so marginal cost if you're already paying for that. But if you want your transaction to go through quicker, to be prioritised, you can make a transaction that says, I am paying you 5 Bitcoin, but I am putting into the transaction 5.1 Bitcoin, leaving a remainder of 0.1. That 0.1 goes to whoever completes the blocks. So they get that as a transaction fee. And they will put those transactions into the block first, because it's more profitable for them. But you can set any transaction fee you like. 0, 0.01, 0.1, hell, you could do 100 Bitcoins. I wouldn't advise it though. Did I see a hand go up? No? Okay. So even after all the Bitcoins have been generated, miners should still find it profitable to continue to generate blocks. The value of the Bitcoin. I don't know, can everybody read the numbers on that graph? So, when Bitcoin first started in about 2009, there was very little crossover between Bitcoin and US dollars, and a Bitcoin was worth some fraction of a US cent. And it stayed that way for a long time. Maybe it grew to 1 cent to the Bitcoin. I think it was about January or February this year, it achieved parity with the dollar, i.e. 1 Bitcoin was worth $1. By the time I saw it the second time, which was just where this graph is starting, about April time, a Bitcoin was worth about $4. In the last couple of weeks, it's been highly variable. There was a lot of shouting when it reached $10 in the end of May, beginning of June, but in the space of 10 days, 2 weeks, it went from $10 to $30, and then in the space of 24, 48 hours it dropped back down to to $16. That graph isn't actually fine enough to show the real peaks and troughs. At the moment, for the last day or so, it's been at about $20. I cannot reiterate enough. This is a highly variable thing. The smallest, by the standards of by the London Stock Exchange or the New York Stock Exchange, the smallest amount of activity, buying or selling, can swing the market by hundreds of %. So I am not, even if I was a financial advisor, and I'm not saying put all your money in Bitcoin. I have not put any money in Bitcoin other than my time investigating it and generally learning about it because it's interesting. If you were mining back in 2009, when it was really easy, you could run it on an Arduino and you'd probably get blocks if you had the if somebody ported it anyway. There are people who have admitted they hold 400,000 Bitcoins. There are rumours that there are other people who hold 1.4 million Bitcoins. Nearly a quarter of the current in existence. And one of the most vocal objections to Bitcoin is that it's unfair. In the extreme, that Bitcoin is a Ponzi scheme. The only people that make a profit are the people that were in it at the beginning. Now, I'm not going to say either way because I'm not 100% certain. It could be there is still a small chance in my head it could be a scam. I'm becoming more confident it isn't, but I want to give you all the facts, or not facts, that's the wrong word, all the information as I see it. If you want to trade it, go ahead, but be aware you could lose all your money very easily. That graph could drop down back to $1 or below quite easily.
Dropping drawings talk.
I didn't know I had that kind of pull. The graph I'm showing you there is from the main Bitcoin exchange, which is called MTGOX, and it almost exclusively trades Bitcoin to the US dollar. There are UK and European exchanges that do Bitcoin to GBP or Bitcoin to Euro. The volume on those is much smaller. Just to finally give you some pointers to extra information. First 3 links there are